Roofing company, they're paying hefty premiums in workers' comp, as many of you might. We helped find $69,801 and $1,000 savings for the first year by leveraging the large group workers' comp insurance premiums. This was a company that had 277 employees. So that averaged about $251 annually per employee. So let's talk about how we came up with this analysis. So let me give you the backstory on this particular company. It's a roofing company. They have employees nationally, a lot of onboarding and offboarding, a lot of turnover, as many in that industry have. They weren't using a PEO company, but they had a couple of freak accidents, what they would insurance industry would consider as shock loss. So basically some accidents that weren't normally related to roofing. They had somebody slip and fall on ice, and they had to have back surgery, which was very expensive. They had somebody climb into a dumpster, did something very, very stupid, was a significant work comp claim. So, and then they had their average, what they would typically have in roofing claims. But those two claims that were typically not normally what would happen, basically took their eMod from 1 to 1.5. And they're trying to bid on commercial jobs and government jobs. And they are unable to go out to bid if they're over a 1.0 eMod, just like many in the construction industry. So most of the time, if you're going to bid on those government contracts, as you may know, they want to see your eMod very, very low. So it was really important to them to get that eMod down. And by joining a PEO master workers' comp policy, we were able to get it down to 1.0, save them premiums, and they can go out to bid and not have to lose out on business. So let's take a look at current analysis. We were able to save them significant amount of money on their workers' comp. That was their current premiums. All the other PEOs came in a lot lower. Their SUTA, we were able state unemployment taxes, because they had so much turnover and just very paying high unemployment rates. The PEO companies, oftentimes when you're joining a PEO company, you're not just joining their master health and workers' comp, but you're joining their SUTA rates as well. And typically, if they have low turnover, their rates are going to be less. So there was some significant savings there on the SUTA. Since this company was not using a PEO company, they were just using a straight payroll company. So the PEO fees are going to be quite a bit more. You're going to be getting a lot more than just payroll services. Once again, you're getting consolidated services all in single one source solution. You're getting access to their master workers' comp, lower unemployment rates, HR, compliance, risk and safety. In this particular analysis, they did not leverage the health insurance because they had a better solution outside of the PEO policy. This number one driver was their workers' comp. So as you can see here, anywhere between $69,000 to one was actually even paying, they would have to pay a little bit more. But, you know, a 9% reduction in what they were currently paying. If they did absolutely nothing, it would be 5-year analysis, $346,380 if this company was to absolutely do nothing. It really made sense, not just for the savings, but because they really wanted to not lose out on this government contracting and going out to commercial bids. They needed that eMod down. So if you are at risk of losing out on going out to bids and getting contracts because of your workers' comp eMod, a PEO might be an option for you. So as your PEO advocate, I'm here to try to reduce your eMod rate and reduce the savings on your premiums. If you'd like more information, shoot me an email.